one issue continues to dominate financial markets at the moment, and until it's resolved, I suspect will continue to weigh on sentiment. This is the issue, of course, of Europe and what is going to happen to Greece. Now, in its own right, Greece is not a particularly big country. It's not a particularly big issue to deal with, but it's the ramifications of whether they allow Greece to go into some sort of orderly default or to resolve the issue and avoid a default, which weighs on sentiment. If they do go down the orderly default route, the fear is that the contagion obviously spreads right the way throughout other weakened southern European countries, and given the exposure that the banks have, particularly European banks, to that issue, that this contagion could spread in a similar way to the impact that Lehman Brothers had back in 2008. So whilst we have this issue, if we take a look at the FTSE 100, we're still very much in this very choppy sentiment sort of changing period. We seem to have a low on the market of 5,000. At the moment we're trying to nudge through some of the top end of the range at 5,400. So at the moment sentiment is with us. It's positive, but as you can see from that chart, that can always move against us on a day-by-day basis. One area that I would look forward to next week as a key meeting for the diary takes place on the 20th and 21st of September, and this is the FOMC meeting. This is where the Fed are going to be discussing possibly a wider range of tools available to them in order to stimulate the US economy. So I suspect next week may just be more influenced by US factors than European factors. And at the moment I think this positive sentiment to some extent is being largely driven by thoughts that the American Fed may well announce additional tools to stimulate the economy over there. So as I say, choppy trading conditions. One chart that I've highlighted last week and I think is continuing to demonstrate some weakness at the moment is sterling, particularly against the dollar. I mentioned last week that I think it's more likely to be dollar strength than sterling weakness at this stage, but my suspicion is that sterling weakness is building into the story at the moment. We've seen the dollar sterling rate move from 166, which was achieved in mid-August. Now we're sort of starting to hit lower levels at the 157 area. I have heard some currency strategists talking about a potential further 10% decline in sterling at the moment. So we have to start to build that in. Up until this point, currencies have proved to be relatively stable against each other, particularly the euro relationship to the dollar. But the euro is weakening, and particularly against the dollar. Sterling is weakening against the dollar at the moment, and that may just have some ramifications. But I'm thinking here about Germany and the competitiveness of Germany. A lower currency clearly aids their recovery there. So with that in mind, let's just take a quick look at the euro dollar. We can see there this sort of decline, and it leads me on to the story of the DAX. This is the German index. It's the FTSE 100 equivalent index in the German market. Germany suffered to a much greater extent during the summer. We've seen falls in the German stock market of close to around 30%, and that is significantly greater than what we saw here in the UK. There may be technical factors. The short selling ban that impacted on some of the French banks, which had implications for some of the wider indices. The ban on that meant that I think some hedge funds turned their attention to the German stock market as a liquid way of shorting European equities. So I suspect there have been technical factors there. We've taken a look at Germany and looked at valuations. It appears to us that the DAX is trading on about 7 times earnings compared to the FTSE of about 8.5 times earnings at the moment. So no question these are cheap valuations at the moment, and with a softening euro at the moment, which I think increases the competitiveness of German businesses that trade in the international community, I think it may be time to look at the DAX and looking for some German equities at this stage in the cycle. They've taken a big beating during the summer. This may be the time to take a look at it. I'm also looking at France. I don't necessarily have the same inclination to chase French equities at these levels, but likewise to Germany, they have suffered significantly during the summer months, and this has been largely driven by the banks. We take a look here at BNP, also Crédit Agricole, which has obviously fallen quite significantly, and also Soc Gen. All of these banks are terribly exposed to the ramifications for any move in Greece, whether it's going to default, whether it is going to go and be avoided at this stage, and their equity prices will remain largely hinged on that sentiment at the moment. So if you believe Greece will not default, and what we're hearing is that there's no way they'll allow Greece to default, then if you're looking for a bit of beta, a bit of excitement, then it's probably French banks that are going to rise the most into that particular scenario.